We are going to advise you on the performance of the insurance industry for the year 2019. And I would like to start by giving you the key highlights for the year 2019. In the year 2019, non-life insurance business generated a total of 621.68 billion in gross written premiums, as against 572.79 billion in the year 2018. This, therefore, represents a growth rate of 8.54% in non-life premiums underwritten. Secondly, life insurance business generated a total of 276 billion 320 in gross written premiums for the year 2019, as compared to 217 billion 0.97 in the year 2018. This represents a growth rate of 26.77%. Thirdly, the market concentration continues to be non-life led, where non-life business accounted for 63.86% of the overall written premiums. However, it is important to note that this percentage has reduced by 3% from what it was in the year 2018, and you realize that it reduced from 70% to 60. It reduced from 66.6% to 63.86%. And again, when you compare with what it was in 2017, in 2017 it was 70%, which eventually reduced to 66.6%, and it has now reduced to 63.86%. Life business, on the other hand, has accounted for 28.38% from the overall gross written premiums, as compared to 25.34% in 2018. And this is a positive trend, where life, which collects funds for long term, is gaining its rightful position. We definitely are working to see that life eventually overtakes the non-life business underwritten overall. Health membership organizations, as you all know, these are the monoclass medical insurance providers, generated in the year 2019 75.26 billion, as compared to 69.11 billion in the year 2018. This is 9% growth when you compare to the contribution, as against the 7.74% in the previous year. And this means that now HMO written premiums has a market share from the total gross written premiums of 7.74%. In the year 2019, as you are aware, we have the dedicated micro insurance specialist companies. It managed to underwrite 299 millions in written premiums, in gross written premiums. And this is an improvement from 24 millions it had underwritten in the year 2018. And 2018 was their first year of operation. As you may know, this is more than 1,000% growth. We also licensed another micro insurance company this year, and we expect to see more growth in this line. The reason why this is important is that this targets the low-income people and the jua kali businesses and clients. That's why we encourage micro insurance businesses to be important and also to take root. We are sure this year's operations will be better and it will guide our next move in the year 2021. Despite the continued dominancy of the non-life business, life continued to grow relatively faster than the non-life. As you may have noted, life grew by 26.77% compared to non-life, which grew by 8.46%. And HMOs grew by 8.9%. Regarding the insurance penetration, I would like to inform you that insurance penetration, which actually is the ratio of the insurance premium to GDP, it reduced from 0.844% in the year 2018 to 0.77% in the year 2019. And the decline is as a result of rebasing the 2018-2019 GDP figures. You may need to note that before, the base year was 2009 figures. Now, government made a decision to change them to 2013. Now the base year is 2013. So the base increased, and as a result of that, the penetration levels reduced to 0.77%. Insurance density, on the other hand, increased. And insurance density is really taking overall gross written premiums divided by the population, or what we call the average per capita spent on insurance. This increased from 21,000 Uganda shillings, 236 in 2018 to 24,000 Uganda shillings, 158 in the year 2019. The insurance density, therefore, grew by 13.7%. Overall, the insurance industry remained on a positive two-digit growth trajectory, growing from 859.8 billions in the year 2018 to 973.58 billions in the year 2019. And to us, this is very positive because we managed to hit our target and we surpassed it of 950 billions. So we managed to go beyond our target by about 23 or close to 24 billions. This growth overall was 13.2% growth for the entire industry in the year 2019. And if you want to compare it with our target, we managed to perform by 102% as against our target. There are various factors which attribute this positive growth. One is the strong economic fundamentals. As you are all aware, inflation remained below 5%, resulting in strong growth in the year 2019, which was estimated at 6.3%, and largely driven by the expansion of services, which averaged at 7.6%, and the industrial growth driven by construction and mining, which averaged at 6.2%. And as you may all know, this same growth indeed drive the insurance growth as well. Secondly, this growth is attributed to enhanced distribution channels. Premiums were collected through bancassurance, as you all know, because only bancassurance managed to move from 26 billion in the year 2018 to 53.6 billion in the year 2019. And as we speak, bancassurance alone accounts for 5.5% of the total written premiums contributed in the year 2019. Thirdly, this is attributed to sustained growth in the uptake of medical insurance, mainly by corporate institutions, which grew from 204 billion in the year 2018 to 219 billions in the year 2019. And this accounted for 22.5% of the total gross written premiums. Still, medical continues to dominate the classes of insurance underwritten in Uganda. The fourth point why we saw that growth was the sustained growth in agriculture insurance. As you are aware, agriculture was introduced some time ago, primarily to address the masses of Ugandans who are in agriculture. And you definitely know the percentage of the labor force which is in agriculture. So the Agriculture Insurance Consortium underwrote premiums which moved from 5.25 billion in 2018 to 12.7 billion in the year 2019. And this is 142% growth. It is one of the things which give us comfort, and indeed we are going to ensure that the uptake in the year 2020 onwards is better. Also, the sums insured in agriculture insurance in the year 2019 was 374 billion. Of those who insured their agriculture, either their farm inputs or their livestock or their crops, the total sum insured was 394 billion in the year 2019 as compared to 387 billion in the year 2018. Total claims in agriculture accounted for 1.9 billion in the year 2019. Majorly, the total claims, drought and excessive rainfall accounted for the claims. Drought and rainfall, excessive rainfall, accounted for more than 90% of the claims which were paid in the year 2019. And northern Uganda received claim settlement of over 70%. So majority of the claims which were paid came from northern Uganda. I want also to inform you that the uptake of agriculture insurance has improved from 50,000 farmers in the year 2018 to 82 farmers in the year 2019. And it gives us hope, and we want to do more in that direction. The fourth reason why we registered growth was enhanced insurance customer confidence in the sector, which was ushered in by strengthened complaints redress mechanism, which is provided by the Insurance Regulatory Authority of Uganda. We carried out a customer satisfaction survey in respect to complaints redress conducted this year, and it showed that 87% of the clients who interfaced with the Complaints Bureau were satisfied with our processes and fairness in the decisions which are taken by the Complaints Bureau. Therefore, the Complaints Bureau is open to the public, and we want whoever may have any dissatisfaction from any insurance provider to feel free to come and enjoy our free services. In the year 2019, a total of 153 complaints were received by the Complaints Bureau, out of which 127 complaints were resolved. Another reason why we registered growth was the growing middle class. And as you may note, this is the population that can support a consumption level of 1 million and above, which, according to the figures, it now stands at 23.5 of the urban adult population and 5.3% of the rural adult population. And this is supported by the study which was made by Sophie Brandt and Ojok Okello in their publication, Uganda's Rising Middle Class, a Roaring Lion or a Sleepy Kitten. When the middle class increases, the population that accounts for growth in the uptake of individual life also grows. And therefore, that accounted for increased uptake of insurance. And lastly, the growth is attributed to improvement in risk consciousness amongst the population, resulting from, among other things, the increased public sensitization campaigns, which the Insurance Regulatory Authority, Uganda Insurance Association, the Insurance Training College, and other brokers association undertook within the year. When now I move to underwriting performance, and in here I mean the profit or loss within the year. Non-life underwriting profits reduced from 19.36 billion in the year 2018 to 17.93 billion in the year 2019. This is a 8% reduction in the profit margins of non-life companies. This reduction in underwriting performance is due to increased outgo composed mainly claims and management expenses. And claims is the reason why insurance companies really open their doors. Management expenses is the cost of doing business, which we encourage and continue to encourage to be within the ranges which are affordable. Medical insurance continues to be loss-making. As I told you, HMOs alone made an underwriting loss of 2.36 billion in the year 2019. We have already started examining this situation, and we will continue to guide the industry on this. Mostly, we are finding out whether this is not as a result of fraud in this line of business. The underwriting performance only covers non-life businesses, because the life businesses, which are long-term in nature, cannot its profitability cannot be looked at annually because these are long-term businesses. Now I move to the sector asset base. The insurance companies, including the HMOs, continued to be financially strong, where their net assets, and net assets, I mean assets less liabilities, increased by 11.23%. The asset base, or the net asset, moved from 508.2 billion in 2018 to 565.2 billion in the year 2019. The sustained growth in the net assets means the improvement in the ability, the capacity for the companies to absorb more risks locally and provide adequate protection to the insuring public. And this is a good indicator to the growth of the sector. Now I move to the claim payouts. Besides ensuring a stable insurance sector, the authority's mandate spans to protection of policy holders and policy beneficiary rights. Claim payment is one of the core values in the insurance industry's offers to the policyholders and indeed the beneficiaries. In the year 2019, the gross claims paid for both life and non-life businesses, including the HMOs, increased by 14.75%. And in absolute figures, the claims which were paid in the year 2019 increased from 326.7 billion in the year 2018 to 374.9 billion in the year 2019. Moving to the outlook, the year 2020, the insurance sector, just like many other sectors, has already been affected by the COVID-19 pandemic. Whereas Q1 performance of the year 2020 shows positive growth of about 11%, the effects of COVID-19 are to be felt in the second quarter onwards. Preliminary indicators point to a decline in the performance in the second quarter up to 50% compared to the similar period in the year 2019. However, how worse or well it gets will entirely depend on the direction the pandemic takes. Otherwise, some recovery is expected beginning July 2020 when the new budget takes effect. And our expectations are as follows on the aggregate performance of the year 2020. 1, the slowdown in economic activity and the near cutoff of the public earnings, which means that there is low disposable income and minimum allocation to insurance. 2, the uptake of new policies has already gone down as many policyholders opt out of insurance by not renewing their insurance covers. 3, significant premiums that have been generated from engineering and construction related investments from both private and public have already reduced. 4, public sector infrastructure investments are bound to reduce as a result of reallocations which are made to strengthen the health sector response capabilities. 5, number of projects that consume insurance are donor funded, and these funds are anticipated to reduce in the year 2020 onwards. 6, there are more insurance premiums emanating from travel insurance since international travels were banned, and premiums from marine insurance has also gone down as a result of international trade slowing down. 7, the increased lapse rates of life assurance policies as COVID-19 has disrupted the income streams of millions of Ugandans with disproportionate impact on the private sector. And 8, high claim payouts for particular classes of insurance, such as business interruption, workers' compensation, medical, among others. However, not everything is lost. And on the optimistic side, there are signs of successful containment of the effects of COVID-19 as people slowly return to work. Once the discussions on the stimulus packages are actualized, we expect the economy to recover, and the insurance definitely will pick up. Secondly, COVID is likely to improve risk awareness amongst the population because it has demonstrated how devastating an unplanned risk can be. As you may well recall, before we are talking of the National Health Insurance Scheme bill, which is before Parliament, and the way the speed it was moving was not the speed it should. But now, if every Ugandan had NHIS or a medical insurance card, government would least invest in the health sector because the private investment would be huge. And indeed, in provision of medical insurance, even the caring and the uptake and the medical and the boarding of people is taken care of. So government would be relieved greatly. The third point on the optimistic side is that compulsory uptake of marine insurance from local insurance players, which is going to be effective 1st July 2020 via the online platform that has been developed in collaboration with the Uganda Revenue Authority and the insurance underwriters, and indeed, which is spearheaded by the Insurance Regulatory Authority, is expected to generate sizable premiums. And 4, the improved compliance to the statutory motor third-party insurance, as the online purchase of the insurance will become compulsory also effective 1st July 2020. The fifth point why we are optimistic is that the investments in insurtechs to deliver new insurance solutions is also expected to gain traction and appeal to the new clientele, who are majorly the youth. 6, the demand for inclusive insurance solutions, especially the agriculture insurance, is expected to grow as people look for more ways of hedging themselves against the potential losses arising from the risks such as floods, locusts, drought, among others. And 7, leveraging on social media and indeed other technological platforms to drive the insurance message to create the much-needed insurance-conscious community. Lastly, the growth from anticipated emerging sectors such as takaful. As you know, takaful is Islamic insurance. You may need to note that Islamic banking, many people, not only Muslims, are the ones who are doing Islamic banking and Islamic insurance, which is takaful. So it is going to take root because the regulations will soon be out, and we expect many people to start buying Islamic insurance. Also, oil and gas is an area we expect much premiums to come in from, and indeed the insurance industry is ready for this business. Also, as I said, the national health insurance is expected to become a law, and we expect pretty soon that we should be putting in place whatever is required to operationalize the NHIS. And the new infrastructure projects, as you know, when they read the budget, they are infrastructure projects which come with a new budget. So we expect new projects to be on board. That ends my communication, but may you be interested in seeing the details. We have provided you with a summary of how the insurance premiums have been moving from the year 2013 up to the year 2019. And we have also shown you the percentage growth in terms of the premiums, and we break it down into non-life, life, HMO's business, and the micro insurance business. Overall, we also show you the GDP at market prices and the GDP growth rates. They are in the same table. We also show you the penetration levels from 2013 to date, and we also show you the exchange rate of Uganda shilling to the dollar, and indeed we show you the insurance density in Uganda in dollar and also in Uganda shillings. We have also provided you with the insurance industry performance for the year ended 2019, where different insurance companies, and this is broken down per insurance companies, how they have performed. You may need to realize that 2 insurance companies performed beyond 100 billion underwritten premiums in the year 2019. We also have 2 companies which performed between 50 and 100. And we have many insurance companies which performed beyond 10 millions, and others 9, with the last one performing underwriting 474 millions because it had just come back on board. On the part of life, also we have shown you those companies which performed beyond 40 millions and those which performed between 30 and 40 millions. The one which performed with 10 billions, I beg your pardon, and the last one with 2 billion, 130 millions. On the part of HMOs, we have also shown you about 2 of them have performance which is close to each other, and the other 3 with various performance. And indeed, as I told you, we had only one microinsurance company which underwrote 299 millions. We have gone ahead to show you the industry summary on the gross written premium, and we have broken it down for non-life and the life and the industry, the grand industry totals, and the GDP at market level. As I told you, the rebasing took place last year. You may need to get that from what the Ministry of Finance did, or UBOS is in charge of that. We have also provided you with the insurance industry gross claims paid for the year ended 31st December 2019. And we have given company by company how much each company paid within the year. Both life, non-life, HMOs, and the micro insurance company. And indeed, we have gone ahead to analyze the gross claims paid for the year 2019, where the non-life claims were 244.12 billion. The life companies paid 72.04 billion. HMOs paid 58.62 billion, and microinsurance paid 99 millions as claims, giving a total of 374.88 billion paid in claims. We have taken also the liberty to tell you how Uganda Reinsurance Company is performing, and we have given you even the classification of what premiums came from where. The detail might either confuse you or it may educate you, but you will take the liberty to look at it. However, it is important to note that gross premiums for non-life for Uganda Re was 47.82 billion, and from life it was 2.72 billion. Overall, Uganda Re, or Uganda Reinsurance Company, underwrote 50.53 billion. And that is very positive because, as you know, we created Uganda Re just recently, and now these premiums can now remain here. However, when a reinsurance company is formed, it also does bit of reinsurance because we cannot risk a company to go under. So we have shown you what is called retrocession. That is the reinsurance of the reinsurance company. And we have also gone ahead to show you the net earned premiums. So net earned premiums, for your information, 30.22 billion were retained within the country. So the 20 billion were offloaded to other reinsurers outside the country because Uganda Re was also getting support. But every year passing, Uganda Re becomes stronger. And you may need to know that what was seeded out was about 40.65%. What was retained locally was 59.81%. The loss ratio, they paid out 55.38%. So much of the premiums they underwrote, they paid it in claims. And the commissions were 22.6%, and management expenses of 7.42%. We have gone ahead to show you the financial strength of the companies we have. And this is showing you the net assets. And this is the strength of the companies we have. So you will look at it at various levels, non-life companies, life companies, HMOs, and the grand micro insurance company. As I told you earlier on, the grand total or the strength of the companies we have is 565.23 billion. And this is broken down by non-life net assets being 443.78 billion, and life having 117.4 billion, and HMOs being 3.37 billion, and micro insurance being 675 millions.